Drugi dzień
This is the second day of the fifth European Forum for New Ideas in Sopot.
Witam Państwa niezwykle serdecznie.
Welcome back. Dorota Warakomska. And now we are going to start the series of parallel panel sessions. This panel is about the world economy in times of uncertainty. It's coming up shortly. Prior to the panel discussion, we shall have this award ceremony. The Emerging Market Champions Awards will be presented by the Citi Handlowy Kronenberg Foundation. Good afternoon, ladies and gentlemen. I would like to welcome you at our Gala Award ceremony, Emerging Market Champions. This is the second time that we are going to present our awards at EFNI. I would like to thank the members of the chapter that made decision on the winners. Mrs. Henryka Bochniarz, Mr. Olechowski, Mrs. Solange Olszewska, Janusz Steinhoff, Beata Stelmach, Herbert Wirth, and Mr. Andrzej Olechowski was the chair of this chapter. Now I would like to invite Mr. Sławomir Sikora, the CEO of Citibank Handlowy.
Dzień dobry Państwu. Chciałbym przede wszystkim podziękować.
Good afternoon, ladies and gentlemen. First, I would like to thank the organizers of EFNI for inviting us to join this great event. We would like to make sure that the competition that we are going to award today will become a standing point on the agenda of the business meetings in this country. Let me say a few words about the whole concept and idea of the Emerging Market Champions Award. Many clients that we have became very successful on the Polish market, and eventually they decide to expand their business elsewhere. Everyone who's familiar with the international business is very well aware of the fact that this is a different game in terms of competition that you have to face and in terms of management challenges. This is a tough challenge, and it's a rare thing when your domestic local experience can be translated and leveraged on the international markets. Therefore, we reached the conclusion that the Polish companies who are able to score such a great success deserve a reward, an award. And there are many reasons for that. The business success is one of them. The fact that the business owners are able to score the economic success is just part of the success story. I think that an important aspect is that that their success spills beyond the economy and beyond the business rationale. They very much are able to translate our aspirations to have more international recognition in the reality. So I think that their success helps meet the social expectations that and aspirations that Polish people have. KGHM was the winner of last year's edition, and we awarded them for the great deal that made them overnight a global company holding assets in both North and South America. Today, we have a list of 100 entities divided by 57 categories. Polish investments, Polish international investments, and 43 entities in terms of foreign investments in Poland. So if we compare these numbers to the last year numbers, we can see that growth was threefold.
Zgłaszała
The candidates
grupa ekspertów,
were
Rada Ekspertów, ponad 200 osób, liderów
suggested by
opinii,
experts and
gospodarki,
key opinion leaders,
specjalistów
experts
w
on
zakresie
the economy and entrepreneurship.
Kapituła wyłoniła ostatecznie laureata
The chapter of this competition
wyróżnień.
made the final
Tak
decision
jak wspomniałem,
on
poza
the winners
sukcesami polskich
who will be
dostrzegliśmy,
awarded today.
że
But as I said, beyond the
potrzebne
success
jest spojrzenie szersze,
of Polish
spojrzenie
businesses,
międzynarodowe, że
we
Polska
need
stała
to
się
have a
miejscem,
broader
którego
perspective.
przypływa
We
coraz
need
więcej
to
inwestycji
see that
zagranicznych.
there is more and more
Zagranicznych
international
inwestycji z krajów
or
emerging.
foreign investment coming to
Proszę mi
Poland,
pozwolić
including
powiedzieć
those
kilka
from
słów,
emerging markets.
po angielsku.
So let me just address.
We want to, this year, extend our awards, and our panel awarded one company from emerging markets because we realized that those companies bring not only capital to Poland, so much needed, but also they create jobs. And even more importantly, for the next 5 years, they bring the intellectual capital. So we want to appreciate both those among the Polish firms who decided to expand internationally, but also those from emerging markets who chose Poland as the destination for their investments, and they achieved the success. Szanowni Państwo, nadszedł teraz czas, by przedstawić zwycięzcę w kategorii polskie
Ladies and gentlemen, now
inwestycje
it
zagraniczne.
is time to present the winner of the Polish Investments Abroad category.
Będzie prawie jak
So
na wręczeniu Oscarów.
I've been given an envelope, so it's almost like an Oscar award presentation.
I laureatem Nagrody Emerging Market Champions,
The winner
Citi
of Emerging
Handlowy w
Market
kategorii
Champions,
polskie inwestycje zagraniczne
Polish
zostaje
Investments
grupa
Abroad,
Nowy Styl.
goes to the Nowy Styl Group
Za konsekwentnie realizowaną strategię rozwoju na
for
rynkach
the
zagranicznych,
consistent
dzięki
strategy
której w ostatnich 3
delivered
latach
on the international
firma
markets,
dokonała
and as a
m.in.
result, over the past 3 years, the
niemieckiej
company made the
marki
acquisition of the
Baudrexl.
German brand Rodegland,
Zakupiła 50% udziałów tureckiego
acquired
TCC, the
50% of the
Chair
Turkish
a
TCC,
także
the chair
podpisała
company,
umowy
and
o
signed
przejęciu
contracts
szwajcarskiej
to
firmy
make an acquisition of the Swiss
Citag
company
AG.
Citag AG.
Nagrody odbiorą panowie
And the
Jerzy
award
Chrzanowski, wiceprezes zarządu,
will go to
dyrektor
Mr.
inwestycji i zakupów,
Mr. Chrzanowski,
właściciel firmy, oraz
VP
pan
and the Director for
Rafał
Investments and
Spas, wiceprezes
Acquisitions, and
zarządu,
Mr. Rafał
dyrektor
Spas,
finansowy.
the
Chciałbym
VP
również
and the
zaprosić
CFO.
na scenę przewodniczącego
I would like
kapituły,
to invite to the
pana
stage
Andrzeja
the chair
Olechowskiego,
of
z
the
którym będziemy mieli przyjemność
jury
rozmawiać.
chapter, Mr. Andrzej Olechowski.
Zapraszam.
Szanowni Państwo, droga kapituło, bardzo serdecznie
Ladies and
dziękujemy.
gentlemen and members of the chapter,
Nie wiem, czy Państwo wiecie, jaką mamy ciekawą pracę.
well, thank you for this award. I'm not sure if you're
Każdego
aware
dnia
of
projektujemy i wyposażamy
the interesting
wnętrza,
things that we do
wielkich
in our
europejskich
company. Every
korporacji,
day we designed and equip offices of large European corporations, small and medium-sized companies. We talked to managers from many countries. to make sure that the office space filled by thousands of employees is user-friendly, ergonomic, and healthy. Every day, we work with our designers who come from different areas of expertise, and we design furniture and chairs so that millions of people who work can take a good care of their health, and so that their work will not have any adverse impact on their health. At the same time, we make acquisitions in Western Europe, and I have to be honest with you. We have great satisfaction when we make acquisitions of German, Dutch, or Swiss companies, and we build one huge group, because in our business, the value is created in many countries. The value chain always runs through a series of countries. Therefore, to us, these record of acquisitions is the beginning of the process that will take time to complete the integration process. It takes months and years, and after some time we say that it's not just another acquisition, this is part of our group. So to us and to our managers and employees, this is great satisfaction, and we are also happy that by running this business we are able to deliver good financial outcomes. And on top of it, we are being presented with such a great award. Now it feels complete, so I would like to thank the organizers, and I would like to thank you, and I do hope that we are just at the beginning of the great expansion of the Nowostyl Group.
Ladies
and gentlemen, now I would like to ask the chair of the chapter to remain with me on stage, and let me open the second envelope.
The winner of Emerging Market Champions Citi Handlowy Awards in the Foreign Investment in Poland category is company Samsung. For its numerous investments and increasing of employment in Poland, Samsung Electronics Poland manufacturing in Wronki has one of the most modern production lines of washing machines, refrigerators in the industry. Presently, the plant in Wronki employs 4,000 people, and until the end of 2015, it will increase the employment by another few hundred jobs. Samsung Poland R&D Center in Warsaw is one of the biggest and fastest growing R&D centers in Central and Eastern Europe. The award will be presented to Mr. Yongmin Lee, Managing Director, Samsung Research and Development Institute, Poland.
Dzień dobry. First of all, I would like to thank Cronenberg Foundation, Citi Handlowy Bank, and the Council of Experts who have chosen the Samsung Electronics as an emerging market champion. In Samsung, we are very proud of that we can support and boost both Polish economy and IT development sector. We are constantly improving and growing thanks to the encouragement and help from the Polish government and the digital sector. Having here in Poland R&D center Samsung manufacturing plant in Bronki and electronics department, we are fully engaged in shaping the digital landscape in Poland. It is an enormous privilege and at the same time a commitment to be called a champion. Representing here the whole Samsung Group, I can assure you that we will work now even harder to prove each day that we deserve this title. One more time, thank you very much. Dziękuję bardzo.
Bardzo dziękujemy i jeszcze raz gratulujemy naszym laureatom.
Thank you, and again, sincere congratulations to our laureates. Before we move on to the panel on the world economy in times of uncertainty, I would like to draw your attention to the report that you were handed when you were entering this room, because when we offer awards, we don't only focus on the best players who deserve the championship, but we also explore and study both opportunities and the barriers that the Polish companies see when they expand abroad. We ran a study this year, and we can tell that results are very positive. Polish companies are very well prepared to compete. 57% of our companies compete with the modern companies. 46% of our players compete against modern large corporations. 56% compete on basis of quality, not price. 87% believe that they are equally or more innovative than their foreign competitors. And in the near future, 41% of the Polish companies operating beyond Poland plan to further expand their business and plan to compete even tougher with the international competitors. 82% of all the companies that decided to expand their business abroad are very happy about their decision, and they plan to continue their business beyond Poland and to further expand it.
Now I'd like to invite the moderator of our session to the stage, Mr. Andrzej Olechowski. The panel's title is The Global Economy in Times of Uncertainty. Good afternoon, ladies and gentlemen. I'd like to invite our panelists. First of all, Mr. Piotr Baudrexl. Mr. Baudrexl is the CEO of Siemens Poland. Mr. A.S. Ramachandran. Mr. Ramachandran is a member of the board of the Global Subsidiaries Group, Citi, UK. Mr. Piotr Dziwok is the president of the management board of Shell Poland. And Mr. I seem to have lost the name, Marcos Bonturi. Marcos is Director Global Relations, OECD Paris. Before we move on to the panel, let me just handle one important logistics matter. Ladies and gentlemen in the audience, you will be answering questions which are not related directly to what we are going to discuss in the panel, but with the subject. And you need to listen in order to be able to answer them reasonably. So these two questions are, first of all, is the process of globalization receding or moving backwards? And the second question, are we in danger of a military conflict on a large scale? Now, moving on to the panel. I don't know if you have the same impressions, but my impression is that it's now time for crazy people and crazy things, as if the financial crisis threw the world from out of the state of balance or equilibrium. The things that happen are either unheard of or very stressful. In the economy, oil, gold and other commodities have dipped to the levels which we have never expected. Banks offer negative interest rates on deposits. Stock exchanges fluctuate in a way which would have been described previously in headlines as Black Monday, Black Tuesday, and today they don't even end up on the first pages of newspapers. International commerce, which has always, historically speaking, his growth, historically speaking, always preceded economic growth, this year is simply just crawling. Let's look at politics as well. An important country, a permanent member of the Security Council of the United Nations, invades its neighbor and takes away part of its land. In the Middle East, there is a caliphate, something coming up, something from the deepest, darkest dreams of the deep Middle Ages. Turkey wants to enliven its Ottoman tradition. One of the prime ministers of the European Union says that he doesn't like liberal democracy very much, but he likes non-liberal regimes instead. In Asia, there are tensions, pressures increasing due to an island which is in fact just a heap of rubble. Wars which are waged in various places, mainly in Africa and the Middle East, have caused more than 50 million people to escape from their permanent place of residence. So what's happening, really? In order to understand this, and more importantly, to understand, to have some conclusions for the future, we need cool-headed, competent people. And we have such cool-headed and competent people on our panel, for which I'm very grateful to all of you, our panelists. We want to talk about production, about how decisions are made in uncertain times, and what is the impact of uncertainty on these decisions. We want to talk about finance, a sector which is the source of very strong disturbance in the economy, about energy, which it seems is entering into a new paradigm. A sector which is extremely important due to the changes that take place, and of course politics, which puts it all together, and international relations. As I said, we have excellent panelists to address all these matters. We are going to start with Piotr Baudrexl, who will tell us, he is the CEO of Siemens Poland, who will begin by telling us about production and technology. Over to you.
So, uncertain times is a very interesting subject, because what drives, in reality, what drives investments? First of all, demand. So in uncertain times, the first question is, do we have additional demand for new production capacities, for new inventions, and so on? This is a very difficult question, because in uncertain times, it's very difficult to predict. Second thing, uncertain times in politics. One of the most important issues to make future investments is political stability. You will not invest in any unstable country, because the risk of losing your investment is too high. So if we talk about uncertainty in political stability, this rules out the countries where this is existing. And we can see the effects right now. There's very little investment in the Middle East. There's not a lot of investment going on in Africa. There's not a lot of investment going on in Russia, for an example. So political uncertainty is a major issue. The next issue, which is also important for any investment, is legal stability. You want to have your investment protected. And your investment is protected only if you have a reliable, stable legal system. And I think this is one of the issues where we also have a lot of deficiencies in many countries of the world. We also have to distinguish between two types of investment. I call it screwdrivers and brains. What do I mean? Screwdrivers is investment in hardware manufacturing. Brains is investment in innovation, in technology, in inventions, in research and development. And I think we have to distinguish, because in hardware investments, we have to think about product life cycles. We talk about maybe 10 years, 15 years, and we talk about proper infrastructure. We talk about availability of basic skilled labor forces. We talk obviously about stability again. But what is even more important, and I think especially in Europe is much more important, is investment in brains. Because if we look at investments in hardware manufacturing, they will move on with cost advantages. So if we see as a general trend, if industries is cost advantages in other regions, step by step, new investments in new hardware productivity, new hardware capacity will follow these cost trends. In brains, it's a completely different issue. What we need if we invest in brains is a long-term, stable supply of intelligent, inventive people. And I think this is the future of Europe. And we have to make sure that we use these opportunities. And I think this is one of the major issues we have to address as an industry and also as a political source. And what is important is that we find a good way of cooperation between legal framework, a political positive attitude, and the integration of academic and industrial world. And if I look around the globe, we have very interesting examples. If you look to America, the integration between universities and companies is very deep. If you look, on the other hand, in Europe, we have a very diverse picture. So unfortunately, in Poland, my experience is there's not a very close integration between academic life and economy. And I think this is one of the major areas where we in Poland can benefit from a development. So my pledge to all of us is to think more and more about integration between the different parts of society and use the intellectual properties, the intellectual capabilities to the better of the development also for the economy. Thank you.
Thank you so much. What you expect from bankers is a cool head in times of upheaval. Ramachandran certainly has a cool head. So go ahead, tell us about tendencies in finance.
Sure, thanks, Andrzej. I mean, clearly, there's no doubting the fact that we are living in very challenging times. But I'd like to talk about three, what I call mega trends that the financial sector is seeing today. And the three mega trends, the way I see it, are globalization, regulation. I'm tempted to say excessive regulation, but let's keep it at regulation. And thirdly, digitization. Now, let me spend a few minutes on each of these three, what I call mega trends. Now, the topic of the panel discussion today is globalization backtracking or not? And I have the privilege of having been into 30 countries in the last 3 years in the course of my role. And I'm absolutely convinced, and I'm categorical, that globalization is here to stay. It is a genie out of the bottle, and it is not going back into the bottle anytime soon. So let me give you examples of huge, large investments cross-border that have happened very recently. Korea is investing in Mexico with large billion-dollar automobile plants. Jaguar Land Rover is investing in Eastern Europe, as you probably have seen recently. Foxconn, the Honhai, Foxconn, whatever name you want to use, the Taiwanese manufacturer of Apple iPhone products, they are manufacturing in Brazil, they're manufacturing in Eastern Europe, they now announced $5 billion of investments in India. So these are massive, huge investments. Just recently, yesterday, I saw Alibaba is taken stake in Paytm, which is an internet portal, again, payments portal in India. So globalization is in full steam ahead. It is not going back anytime soon. Now, what does it mean for the financial world? Obviously, all of these companies are sending capital, receiving capital all over the world. And that's where the financial sector has to obviously live up to the expectations of these corporates. But what we are seeing, on the other hand, is a bit of a backtracking. Many banks are changing their strategy today to not necessarily global, not even regional, and kind of sinking back into their own shells, which, by the way, is not what Citi is. Citi has been providing the global financial infrastructure for ages, and we will continue to do so. That is our avowed, stated strategy. But why is it that the other banks are doing what they're doing? And that brings me to the second mega trend, which is regulation. Regulation, post-financial crisis, has become an extremely throttling kind of a dynamic for banks. And why do I say that? I say that because the nature of the financial industry is such that there will always be issues, and regulators woke up with a start after the financial crisis. And I don't blame that at all. If you look at what happened in the US in the subprime market and in the leveraged lending loans, the kind of things that had started to happen were completely unconscionable. I'm sure you've all heard and read about the ninja loans, right? What does ninja stand for? No income, no job, no assets. Those are the kinds of individuals that were being given mortgages. And so the pendulum swung desperately to the extreme, where the financial sector started taking risks beyond anybody could reasonably expect to take. So that's the reason why the regulatory backlash has been so severe. And there are people who are optimists who say that the regulations, they are pendulums, they swing one way or the other. But in my view, it is more like a big bang that has happened. It's not a pendulum swinging back. It's the big bang of explosion. The expansion of regulations is going to be like the universe forever. We're not going to see that stepping back anytime soon. So how do we react to these regulations? In spite of all of the pressure, and let me give you examples of what types of regulations are that are hurting banks today, impacting banks today. Basel III, all of you know what that means. The amount of capital that banks need to keep has increased dramatically. And that is having unintended consequences. So what are the consequences of that? Long-term lending is not attractive anymore. So while the world needs a lot of infrastructure funding, a whole lot of long-term lending, it is not something that banks are any longer keen to do because it hurts the capital tremendously. Similarly, project finance, same story. And if you look at the amount of cost that has added on to the banks because of compliance of regulations, it has become uneconomical for smaller banks to be doing lending to the SME sector. So what is happening is, instead of expanding the availability of finance to the common man and to the SME sector, it is actually throttling the availability of finance to where the finance is required. This is unfortunate, but as I said, it is inevitable because the pendulum had swung too far. So what is my expectation on regulations going forward? Regulations, unfortunately, can never, ever accomplish the desired results. And I'm tempted right now to point out to the most recent fiasco with Volkswagen. In spite of all the regulations, somebody somewhere wants to try to beat the system. And we will see that. We will see that time and again in the financial sector. We will see that in every other sector. And so that brings me to the point that at the end of the day, it is only the culture of ethics that will help the financial sector to progress. And that's something which, again, is worth pointing out. Citi, for the last 4 years, has been championing the cause of ethics in business and the cause of good practices, the right practices in business. So regulation is here to stay. It is unfortunately throttling finance, but it is what it is, and we have to find ways and means of improving the quality of business rather than trying to stop the regulatory juggernaut. And finally, it brings me to the third point, which is digitization. Unfortunately, if regulations were not as stringent as they were, there would be an incentive to innovate. And we would find far more innovative products coming up. Today, what's happening in the banking system is any new product, any new process, any new solution, there is a huge hesitation to go ahead because of the cost of regulations. We need approximately 25 approvals before we can get anything out to market. And we are still worried that some regulator might pull us up for having brought something wrong to the market. So it is having an impact on how the banks are reacting to it. On the other hand, there is a whole lot of innovation happening elsewhere. Citibank, we used to like to say that we are a technology company with a banking license. What is happening today is all the technology companies are taking to finance and banking with a vengeance. And as a result of which, we are seeing Google Wallet, Apple Wallet, Paytm in India, Alipay, et cetera, et cetera. So there's a huge amount of financial innovation that is happening outside of the banking system, which unfortunately the regulators are not up to speed yet with. So while they are grappling with how to deal with banks, there is a huge amount of new innovation happening in the technology world, which is the third mega trend I'm talking about as digitization, which is happening under our noses, under the regulators' noses, which will take time for people to understand the dynamics. I'll give you a quick 2-minute update on how the digitization trend is so dramatic. Less than 3 weeks ago, in what we call the startup capital of India in Bangalore, the ex-CEO of Infosys is one of the large IT companies from India, global leader. They've expanded in the last 10 years all over the world. He presented a solution with a smartphone which impacts banking. So what they've done is they have used a biometric chip in a smartphone, which helps, obviously, identification of individual in a unique fashion. And that is the so-called two-factor identification for making payments. Now, why is this relevant? Because in India, as some of you may already have read, they have rolled out last 6 months, last 12 months, biometric identity cards for every individual of the population. So a billion population country, which had absolutely very low banking penetration, now suddenly has 600 million new banking accounts as a result of the biometric identity card. And you put the biometric identity card into the smartphone, and that enables you to make payments instantly, real-time, online, across the whole country. So that is the scale of technological innovation that is happening, which, by the way, the Central Bank of India is trying to come to terms with. They have just last month granted payment licenses to 12 corporate companies. 12 companies. So these are the large Reliance Industries, which you might know, Vodafone India, Airtel India. These are not banks, and they are regular companies which you might know, who have been given payment licenses. And that's the scale of change that is happening. So back to my mega trends. Globalization ain't stopping, regulation ain't stopping, but in spite of that, innovation is happening. And finally, digitization is going to completely change the landscape. So while we are living in completely challenging, difficult environments, there is still plenty happening which all of us can leverage and look for growth. And I will stop there and pass on to the next speaker.
Thank you so much. Panie prezesie, zgodzi się pan, że dzisiaj sektor energetyczny jest przedmiotem największych zawirowań.
The President, you have to agree that the power sectors can see probably most turmoil today. So would you please cast more light on these developments? Well, thank you. And I would like to thank President Sikora and yourself for inviting me to this panel. And I would like to thank the members of the audience for joining us. And I do agree with Andrzej that our sector is probably seeing the greatest turmoil as we speak. But at the same time, this sector has the greatest impact on the modern economy. Just take a look at the US. What happened after the shale gas revolution? It is estimated that this revolution contributed 1 or 2% to the US GDP. US is the largest energy consumer worldwide. Just look at the manufacturing. And now look at the oil-producing countries. Just see the impact on Norway, Russia, Venezuela, Iran, how these countries are affected by oil prices. So my point is that energy, availability and price of energy has a huge impact on the economy, much greater than digitization, innovation, etc., etc. I don't want to make any projections into the future, but I would like to highlight some trends that we see unfolding in the energy sector. The first key trend is the increasing demand for energy. If you take a closer look, it turns out that our population will grow from 7 to 9 billion over the next 20 to 30 years. This is a huge increase. What we are witnessing, huge migration to the cities. and urban areas have much higher demand for energy than rural areas. Today, 3 billion people do not have access to modern energy, the one that we have it in the Western Europe. In Western Europe, if you don't have access to energy, well, you suffer because you cannot see the football game on TV. While when you look at other parts of the world, lack of access means poverty, or having access means having access to the riches of the world. International Energy Agency estimates that by 2040 demand for energy will increase by 37 to 40%. This is a huge growth. So what's going to happen? How we are going to respond? Today's reserves and deposits of oil depreciate by the rate of 55% per year. It appears that with the current resources, we are not able to meet the needs that are emerging. We do have renewable sources, but it is not realistic to believe that renewable sources will be sufficient to cater to the growing needs for energy, which means that we need new sources. And we need to take the new approach. I'm not sure how to say it in Polish, but in English, my point is that we need the new energy mix. And I believe that the natural gas will play a more prominent role in this picture. Another mega trend that we see, and it impacts our daily life, is, as you may guess, the climate change. The average temperature of this planet will go up by 2 or 6%. 2% is taken for granted. We start to take some preventive measures. We try to come up with the regulations that will contain the situation. But if we progress at the current rate, the global temperature will go up by 2%. However, if it goes up by 6%, that will trigger huge climate changes on this planet. The water level would go up by many centimeters. So it appears that 6%, that the growth of the temperature by 6 degrees is something that is avoidable. Everyone is looking forward to the COP conference in Paris this year. But when you look historically at the climate regulations, well, there have been a lot of discussions, but they were not translated into the consolidated actions. But this issue becomes more and more prominent, and perhaps this is some comfort to all of us. We came up with the carbon pricing mechanisms. They are reasonable. However, the implementation of these mechanisms has not rendered the results that everyone expected. We have the very first CCS projects. The first project is located in Canada. There are 2 major projects being done currently. That should have some impact on the climate, but the scale is negligible. There is no global consensus on the climate, and what we need to do to prevent the changes. And again, it takes us back to natural gas. The third trend, or the third driver that I may identify, is the uncertainty, and Andrzej mentioned uncertainty. So in the sector of energy, we have a huge uncertainty. We are not sure whether the product will be available, whether the product will be transmitted from one country or another. We don't know what is the energy mix of tomorrow. Prices are highly volatile. That impacts investment climate. Many companies cut their capex because the commodity price or the margin is not sufficient to provide funding for such investments. So that contributes to uncertainty. Then The transmission routes are also a big question mark. We don't know if the energy resources coming from one place will be available tomorrow because there is uncertainty of the transit. Now, what can we do to counteract these trends? We may open the markets, we may take more liberal approach, so we are trying to do so. We talk here in Europe about the energy security. I believe that these actions need a boost. And on top of it, we have to accept the fact that energy has to be transportable, and we have to accept the different ways of transportation. We need to have more coherent and transparent legislation across countries and between different groups of countries. So what else can we do? Again, I see a major role for the natural gas. The natural gas does not have the sufficient recognition today. And now, how all these things impact Poland. Poland has an exceptional position in Central Europe and Eastern Europe because of the scale and because of access to the sea that offers us more flexibility when it comes to managing our energy mix. Very soon we are going to have our LNG terminal operational. These are our advantages, but we have a long list of challenges. We have high coal dependence. This is an exceptional feature of the Polish power sector, and we have to address this challenge. This morning we had a panel at breakfast, and we were talking about it, that Poland has the worst legal regulations for the power sector, the worst in the whole region. Even if you have a license to trade in natural gas, you are not able to do it because there are so many barriers that prevent you from doing so. We have an oligopoly on the natural gas market, and although Mr. Kurela said 2 years ago that this is not true, that the Polish oil and gas company is not a monopoly because they have barely 97% of the market. But that's the picture of the market that you have. And probably we have the worst interconnection capacity in Eastern Europe. And so that's my quick assessment of the market and the trends that we see.
And now to you, Marcos. Obviously, politics and international relations affect production and trade. Now, give us a big picture in this respect.
Thank you very much, Andrzej. This, again, is easier in a way to speak after a number of distinguished speakers because they touch upon a number of very important issues. But perhaps let me just start with some quick descriptions of some key facts of how the world economy has been behaving since the financial crisis. First of all, the recovery has been extremely slow by international standards, by historical standards. We still see this year the US picking up, perhaps 2.5% growth, Europe 1.5%, Japan 0.5%, but the emerging markets have decelerated very, very sharply. China is below 7%, and if you remember just a few years ago it was 10-12%. India, perhaps the only exception that is actually growing quite well, between 7 and 8%. If you look at Brazil or Russia, we talk about -3% on the optimistic side for both countries. And that's very, very important, of course, because emerging markets have been the drivers, the engines of growth since the crisis. And their share of anything you want to measure, global trade, investment, has been increasing tremendously. So again, something to watch going forward. Let me go back to trade and investment, because that's something that we worry a lot about. If you look at, and this was mentioned by my colleague from Citibank, the trade growth has been below trend for the past 10 years or so. Used to have, in the post-war period, trade growing at a multiple of global GDP growth. Twice, sometimes even 3 times. Now it's going below GDP growth. And this year, in some last quarter, there's a major contraction in world trade. So something to consider. Finally, investment. Investment is still below global FDI flows, 40% below pre-crisis levels. Again, this is very bad news, of course, as was pointed out here by my colleagues. Another thing that perhaps is not, we don't pay enough attention is the issue of productivity growth. I think if someone wants to write a book, you know, the great mystery of the missing productivity. You know, I think this is something that we're starting to get our grips on. We have seen a major slowdown in productivity growth worldwide. And what's interesting is that you still have the frontier firms growing very fast, innovating very much, but something seems to have broken down in the transmission belt. And you have more and more firms being left behind. So the dissemination is not happening as fast as it used to happen. And you look at, of course, the SMEs sector in most countries really having a harder time keeping up with the innovation frontier. Last but not least, and this was picked up by you, the issue of inequalities. This is a secular trend that's been going on from before the crisis, but we were told at the time where everybody was growing very fast, don't worry, it's normal, no, innovation is happening, new technologies, in the period of high growth, it's normal that inequality rises. Of course, we had the crisis, and inequality continued to rise. And that's, of course, something that we worry very much about. And it has risen in advanced countries, it has risen in emerging countries, and it has risen in, of course, the least developed countries. So again, another issue that I think I want to put there as some of the major trends that we have observed in the past 10 years or so. Maybe, and Christine Lagarde used the word the new mediocre, you know, to describe this state of affairs. And there's a point there. I guess my comment, just to come back to the more, say, international relations aspect, I would say it's normal that in a period of crisis that international tensions are heightened. And our job should be really to strengthen the dialogue, the multilateral institutions, the framework with which we can address those tensions in a way that leads to perhaps a certain common understanding on how to move forward. I would take an example, the issue of trade. Even though there's a slowdown, you do not observe a major increase in protectionism since the crisis. There are isolated episodes here and there, but you don't see the same type of phenomenon you saw in the 1930s when everybody was raising tariffs, everybody was imposing barriers. This has not been the case, and we have a lot to thank the multilateral institutions and framework, be the WTO or be the G20, for that, because it would have been a disaster if countries had significantly increased trade barriers after the crisis. And this has not happened. So trade has not been growing, but it's not because of the rise of protectionism. It's perhaps something else out there. Let me perhaps just raise a couple of another issue, other issues about how us who work on this multilateral world are trying to address certain things and the kind of things we're talking about. But perhaps before I do that, and one point we all should consider is that perhaps even though we have the G20, I think there's a certain recognition that the existing global governance architecture has not really adapted well. It has not really evolved to reflect the emergence of those new players. And this, of course, has to do with the participation in global decision-making, in a standard setting. And I say many institutions have had a hard time adapting, and we have seen now a proliferation of what I would call alternative global fora. I mean, the BRICS, the multilateral development banks, the new development bank, the AIIB, and a number of other issues. Again, the G20 is a very positive development, and it does, in a way, try to address this issue. But the G20 was created in a way when the house was on fire. You have bring everybody that matters into that G20 house, and everybody brings water. It's very easy. No, you have a bucket, you have a hose, or you have a teardrop, but you're bringing water, and it's a common goal. Now, of course, that the house is no longer on fire, but you need to start redecorating, and it's a bit more difficult to get consensus in the context of the G20, and even the G20. Well, as you know, as the name says, the G20 is not universal. Actually, the G20 is not even 20. The G20 is 19, if you actually counted the numbers. This is a long story, but perhaps we can go into this another time. But the G20 is also making an effort to be more inclusive and bring institutions and countries which have a broader representation in different parts of the world. From our side in the OECD, the organization has totally transformed itself in the past 10, 12 years. We opened up what used to be sometimes wrongly called the club of rich countries is definitely no longer a club of rich countries. We are very much a global policy network. We include all those major countries which are not members of the OECD, but they participate in our committees. They have adhered to some of our standards, which are now truly global. So it's very much our intention to open up and bring that discussion, because we have realized very quickly that for us to be relevant and to have a real impact today, we cannot just be a club of 34 countries that are very like-minded, but again, we need to develop things which have much broader application worldwide. It's not only a matter of bringing countries in, but also changing the type of conversation we have. What are we talking about? The issues that we're talking about. And when we develop new standards, we actually bring them on board upstream, so the standards are indeed, there's a collective ownership of those standards. And of course, we work very closely with the G20, but we work very closely with the UN system in a number of policy areas. I just want to highlight very briefly, I'm watching the time here, two parts of the world where we feel that that's something we should look at. First is China. Now, that was mentioned here. In many respects, the globalization story in the past 30 years has been a China story. Okay? And China just burst into the world, and everybody had to adapt. Now, what we are witnessing is China 2.0. It's a different China story. China is still there, but it's a different China story. It's no longer, the Chinese call this new normal, but it's no longer the growth model of investment, export-led. It's more about consumption. And we are working very closely with the Chinese on a number of issues which you would not have thought that there was an opening for us to work with the Chinese on reforms of the state-owned enterprise sector, the issues of inclusiveness, social, public services, education, health, pensions. So all those things that the Chinese are now looking at in this new normal, which I think we will be seeing perhaps, and we will need to adapt to that in the next 20 or 30 years, because this is something that is there to stay. The second part of the world that I like to highlight, because we are here in Poland, in Sopot, is of course the Euro-Asia context. Our member countries were very keen that we stepped up our engagement with Ukraine, for instance. And we have been working very, very closely with the Ukrainian government. We have working with them mostly on the issues of public governance, the fight against corruption, but also helping them rethink how the government as a whole can support competitiveness and rethink their role in the economy. Very much what we did for Poland and with Poland 25 years ago, we are now doing with Ukraine. But also working very closely with Kazakhstan, which is a country that has very clearly expressed a wish to adhere to the best global standards, and more broadly with all the countries in the region which have reached out to us say for help in adopting and adapting global standards. I'll stop here, Andrzej, just perhaps touching upon just a couple of things that perhaps we haven't discussed enough in this panel. First one is the refugee crisis, and I think that's something that is very manageable in Europe, and we should definitely approach this as an opportunity. We have great experience. We look forward to working with European countries on effective integration policies. And last but not least, the Sustainable Development Goals. Just last weekend, there was a major, the General Assembly of the United Nations in New York agreed on the Sustainable Development Goals, and that's fuel in the tank for the next 15 years for us to think of development as again, of whole of government endeavor. Everybody has made commitments. All the countries in the world have made commitments to achieve the Sustainable Development Goals, and we need to work together on this. Mr. Chair, I know I have covered a lot of ground, but I think the topic merited a very broad range of topics to be touched. Thank you very much.
Thank you so much, Marcos.
Ladies and gentlemen, I have not had such a disciplined panel for a long time. Such disciplined panelists, and so good to the audience as well, because we've been left a lot of time for your questions. Thank you ever so much for this time discipline. I cannot see Madame Warakomska, so I understand that I will handle questions. She did not expect that we would end so quickly. So who of you would like to ask questions? We have room for 2 or 3 questions, on condition that they are concise. If I cannot see any questions, let me remind you that we have asked 2 questions already for your voting. Question 1, is the globalization process retracting? And the second question, are we in danger of a large-scale military conflict? Mr. Sikora is willing to ask a question. The panel was very interesting and many issues were raised. One statement was especially interesting to me. Mr. Bonturi said that migration crisis to Europe, you use the phrase manageable. To me, this is a surprise. This kind of word is a surprise, because so far I've been under an impression that Europe is not handling this problem well. So could you please expand on it? How do you perceive this migration process as manageable?
Yes, I was talking about the refugee crisis, which is a different issue than the broader migration issue. But I would say, I said, let me put it this way, I did not make a comment about the way it was being managed. What I said is manageable, which is a little bit different. I think the type of flows that we're seeing, indeed, are very large, but Europe has the capacity to deal with it. And I think we should see this as an opportunity. We should implement policies which lead to an effective integration of these people, many of which have very valuable skills, in a continent that is facing an aging problem. There's a demographic issue in many countries. This is an opportunity. So this is what I wanted to say. It's manageable. And I perhaps will even say more, it could have been better managed and can still be better managed, but I think that there's still time for us to put things on track.
Let me ask a question to both Ramasi and Mr. Dziwok. There is a number of people who suggest that we may live for another generation, for the next generation, we may live in an environment of very low interest rates. That is, the price of money will be very low, and very low indeed prices of natural resources. Do you think it is right to project that kind of expectation, Rama?
Sure. Unfortunately, yes. If you see, as Marcos pointed out, the trends in the global economy, any projection you see, irrespective of which house is projecting it, is the global rates of growth have slowed down. and the slowdown is here to stay. It is a mediocre rate of growth, etc. In fact, the global economist of Citi goes so far as to say that we are in almost a technical recession kind of scenario. Global growth at 2% is a technical recession scenario. Now, if that's what the outlook is, the outlook for interest rates is obviously not very positive. It is it's going to be low. But we have to start making distinctions here about different countries, different economies. If you look at where the growth is coming from today, let me point out Mexico. Let me point out India. Let me point out other manufacturing-intensive countries. So I think there's the unfortunate aspect of clubbing all the emerging markets together into one lump and saying, you know what, there is a problem. The whole world has stopped growing. China has stopped buying commodities. The world is not just about commodities. The world is about manufacturing. The world is about services. The growth in services sector in every country that I know of is still very, very positive, right? Now, therefore, my outlook is in the next 1 year, 2 years, yes, we are stuck with a deflationary environment. We are stuck with low interest rates. But if you look up to 5 years, it comes back. You will definitely have higher rates of interest. You will definitely have much more robust rates of GDP. So we have to ride it out. We have to ride out this low growth phase. But in the meanwhile, not losing sight of where the opportunities for investment are. Now, let me spend just to elaborate on this point of manufacturing. Mexico, people have ignored the fact that Mexico has not suffered because of the China slowdown. Why? Because Mexico is a manufacturing engine which is fueling the US 2.5% GDP growth, which has come back after some time. And Mexico has a huge domestic population of 120 million people, lots of educated resources, entrepreneurism, and people don't even know that there are Mexican multinationals with massive presence in Europe, which honestly I figured out only 2 years ago, and we are coming to terms with it. So people underestimate the extent of opportunity that exists outside of China and outside of the financial sector. There is plenty that is happening in manufacturing and in services that we can gain from.
Thank you. Panie Piotrze.
Is it possible that over the next generation we will still have low energy prices? Is it a possibility? It will be difficult to speculate about it. But we definitely... Well, let me put it this way. Let me maybe explain. Because this hypothesis would be based on the fact that in order for energy prices or energy commodities, especially oil, for them to return to the previous level, China would have to grow 10% per annum. If neither China nor other countries will grow in this way, the prices will not go back to this level. They will remain low. If they keep being low, and if the predictions are low as well, the countries which have these commodities will attempt to increase production, and by doing this, they will lower the price even more. That is why there's this hypothesis that the coming generation will still experience the low prices. I'm going to go back to the drivers that I referred to before. Today, the estimates are that the low energy prices have been caused by three main aspects. One thing is China, definitely, but there's a decisive influence from the shale gas revolution. The US became independent in terms of energy supply, and OPEC also manufactures. It has no limits on production as it used to have. Is it going to continue? Yes, this is a trend. We can see the cyclical effect. We have low prices, and they will definitely cause several companies from the sector not to invest or to limit their investment volumes. As I said before, the deposits of oil are increasing. If we don't keep investing, look for new deposits, they decrease per annum by 5%. If we don't look for alternative energy sources, the supply will be limited, and then the lower supply will cause higher prices. That is the logic of the markets where we are. Of course, I wouldn't like to be quoted on this, because there are many elements that can influence this situation, as we've seen. For example, it may happen that one country will stop supplying a product to the market because of a war, or maybe means of transport make it non-viable to produce energy. It seems that to stabilize the markets, or stability in these markets that would give even further stability, we need several things that I mentioned before. When we look at the oil market, oil today is the most important element of the energy mix today. But it cannot meet the demand, which we will see at 40% in the next dozen or so years. Same goes for renewable energy sources. We can see quite a good realization of those goals in Europe, but other parts of the world don't look so good in this respect. So I can see a significant role to be played by gas. Gas has several benefits to it. It's more flexible than oil. The prices are more subjected to the supply-demand fluctuations rather than to political decisions. It is easy to send it from place to place. Gas is also an excellent component of the climate policy, because if you burn gas, you have half less CO2 than when you burn coal. So I think that uncertainty is huge. It's very difficult to make any forecasts. And if I were to refer to what the speaker before me said, if we unite our strengths in the global economy to work towards globalization, I think we can sort it out. Andrzej Lubowski, over to you.
In response to your question, we heard that unfortunately, the long-term prospects for energy prices is they are going to be low, and the interest rates will remain low. Why unfortunately? I would welcome such a scenario.
But nobody said unfortunately. Only our banker said unfortunately. Yeah, okay.
I admit,
but
banking is unfortunate.
We understand him perfectly well, okay? Gentlemen, please. Pan Sposób.
Wawrzyniec Smoczynski from Political Insight. I have a question to Mr. Ramachandran on digitization and the innovation in banking, because you referred to digital companies essentially entering the financial sector. What does it mean for banks? What will be their role in 20 years' time, traditional banks?
That's an excellent question. That's exactly the question that we are grappling with amongst all the large major global foreign banks. As you can see, the most successful global banks have become successful on the platform of technology. If you go back, 30, 40, 50 years, the ATM, which was the first, admittedly, transformational change in the banking industry, was pioneered by Citibank many, many years ago. The global payment platforms, which become regular now for corporate banking. All of you, many corporates sitting in the audience are familiar with these global platforms. Again, a technology revolution. What has happened now is just that the pace of change of technology has tremendously, exponentially increased. So what's happening now is not that banks are suddenly worried about, oh, technology is beating us. It's just that banks have to be running faster to adapt to the pace of change. And that's what banks are trying to do. So what will happen is the banks will be burdened, as I mentioned in my earlier remarks, by the extent of regulatory scrutiny. And regulatory scrutiny is happening and I can bore you with it for 15 minutes about what the types of new regulations that are now impacting us banks. And again, we have hired so many people in the compliance function, regulatory function, just to keep pace with what the regulators want us to monitor, assess, report, and control. And that's something which is going to inhibit the ability of the entire majority of the banking sector to innovate. And therefore, these technology companies who are startups, nimble, extremely capable, talented individuals, they will steal a march ahead. But what will happen eventually is that the large banks will also acquire these technologies. Because it is not enough to just have a technological capability. You need to have the systems and processes of running a bank. Because running a bank at a global scale is not an easy task, as I can tell you from my 21 years in the bank. So what will happen is there will be innovations that these companies come up with, and the right bank with the right approach will end up partnering with them and eventually acquiring them. So it is a very competitive landscape right now. Within Citi itself, there is a huge amount of innovative development happening, and that's where scale starts to matter. You will find a clear distinction between the successful and the not so successful banks. In fact, as a result of regulation, just to digress for a minute, as a result of these regulatory capital requirements, what is happening is the return on capital of the large banks around the world is meeting those hurdle rates, but a majority of banks, almost 2/3 of the banks around the world, this is a BCG survey that happened recently, 2/3 of the banks of the world are not even meeting their basic return hurdles. So you're going to have a clear distinction between the winners and the losers. And yes, there will be startup companies who become successful. Their valuations will go through the roof. And then the successful banks will partner and acquire some of those capabilities in the future.
Okay, Peter and Marcos, I think we will all agree here that globalization is moving forward. In terms of globalization meant as interdependence, as intensity of links and so on. But you could also say that some eras, geographical eras, are pulling out of globalization. Some of them because of war, which you said, Middle East, parts of Africa. Some of them because of a political decision, Russia. Russia was conscious was going to happen. And in fact, Mr. Putin referred to that. They want to rebuild the world. Whatever is the real intention of that statement. But Russia consciously pulled out from the network of interdependence, you could say. If that is so, you see them coming back quickly, or do you see that these things can happen in other places? That the world may be falling apart into subsections, sort of. China-centered world or Asia, Russia, axis, US. Well, US is of course critical here. So if it was to make the choice, but it didn't, that it will pivot again in popular understanding, pivot to Asia. That was never that was never an intention, but it was to concentrate on Asia and leave Euro-Atlantic. Then we would have again skewed situation. But do you see changes like that?
I don't think so. I think in the long term, everybody moving out of globalization will be a loser. Why? What is globalization today? We often think only in economic terms, but I think in terms of availability of information and communication. How can you stop in today's technical environment people gathering information about other countries, about other styles of life, about development in other countries? And by the end of the day, nobody, even in a very depressive system, can have a sustainable close out of globalization moves. So I don't believe in this scenario. There's probably one country which has been a very good example, Cuba. In Cuba, they have tried to keep apart from the global world for a very, very long time. By the end, they have to give in, because people will just leave the system. What was the driver of the 1989-90 quiet revolution in Europe? It was the people moving out. It was the people running to a better life. So I think globalization cannot be stopped because it will happen in the brains of people and not only in economic terms.
No, thank you very much for the question. I would tend to agree with my co-panelists. I don't think we can say that Russia is pulling out. Russia is still a country in the G20, is very active. Russia is still a member of the WTO. Maybe some countries are not very happy the way they are implementing their obligations, but they're still sitting there and they're still discussing. So I would say that I would not agree with the statement that Russia is pulling out. Russia is still playing a role that in a number of international fora, and as far as the OECD is concerned, we have suspended accession discussions with Russia last year, but Russia continues to engage. It continues to come to a number of our committees to discuss issues of common interest, and there's definitely a mutual benefit there of having them sitting and trying to develop a common understanding on certain things. Now, moving to the Middle East, I don't think we can generalize in the Middle East. I mean, of course, you look at ISIS, and some people describe this as going back to the Middle Ages or even before. But there are some interesting stories in the Middle East. Tunisia has gone through a relatively successful democratic transition. Morocco is making quite a bit of progress. We have developed very strong relations in the OECD with both countries. The Gulf, including Saudi Arabia, is also starting to consider some type of measures that we believe are positive. Saudi Arabia is a member of the G20. Iran, no, you just had a major agreement that was signed. Again, it's an opening. We'll see what the future brings, but again, it's an opening. So let's not generalize. I don't think we can say that the whole region is moving back. Indeed, there is a major problem that we have now in Syria and in some other countries. But again, I don't see things really breaking down. And I come back to the issue of strengthening the multilateral fora and networks that will allow us to manage the normal tensions that exist between states.
Yes, the world governance. Okay, gentlemen, let us do a quick wrap-up. We've touched upon many subjects, so why don't we wrap it up on globalization, your view, where we're standing. We want to say you, then Piotr, then you, then Mark.
Sure. I mean, as I started out saying, globalization is a genie out of a bottle. It is never going back into the bottle again. And in terms of the trends that I see, there is no stopping the movement of capital wherever there is the return on that capital. Therefore, whether it is Latin American multinationals going elsewhere, whether it's Asian multinationals, and we started the session today with an award to Samsung Electronics, which needs no introduction. You know, Samsung Electronics is selling in every corner of the planet, the best of technology is possible and giving iPhone a run for its money. So the force of globalization is something which is unstoppable. And that's where global institutions like Citi are also able to support them. So to conclude on my remarks, I would say there is a lot of pessimism that people like to wake up every morning with. But notwithstanding the pessimism, the force of globalization is what I say is the reason for optimism. There is plenty of optimism if you drill down into where the globalization trends are happening, where the investments are flowing, as a result of that, how we can benefit. And it's an open world, it's a technological world. There's plenty we can do as a result of the benefits of globalization. Thank you.
I agree. I believe that globalization is progressing. This is not a linear process, but there are very few linear processes where you travel from point A to point B and you travel at a stable rate of speed. Well, there are various commotions and the speed may vary, but overall I see this trend. Twice in my life I lived in Russia. First time at the late 1980s. At that time, for the first time, Pink Floyd came to Russia. They started their concert, and suddenly 2,000 Russians that were sitting next to me got on their feet and they started to sing Pink Floyd songs in English, and I did not actually know the copy of this song. So I felt that the world is converging, and digitalization supports that trend, and travel opportunities do support the trend. Take low-cost airlines. People tend to travel. And the same happens in the world of economy. We continue to talk about Russia, and I believe that Russia needs globalization more than the global world needs Russia. If you look at the trading partners of Russia, this is Europe and China to some extent. But Europe may actually import energy from different sources, take Middle East or other locations. So I don't see a risk that this process would stop, and I believe that this is a positive development.
I fully agree, and I just want to come back to my point. If you have open communication, you cannot stop globalization. I think we also have to consider globalization is a great benefit for all of us. And if we think about times where globalization was stopped, take the years 1929 in America, where we stopped globalization, and that's the only example I have where it was really stopped consequently. It was a disaster. The whole world suffered, and it ended, in my opinion, in even giving a push to have a second world war and all this type of issues. So we should all be very happy that globalization is taking on, and I think we all have to be fostering globalization and be happy that we have this modern technology which is fostering it.
Couldn't agree more with my fellow panelists, but perhaps I'll add one point. Globalization is definitely not a zero-sum game. We all potentially benefit, but I emphasize the word potentially. So we need to pay perhaps increasing attention on policies that would allow that the globalization benefits all. And I'm talking not only about benefiting countries that perhaps have not tapped into those global value chains in the most effective manner, but also within countries, companies, some SMEs who have not really internationalized as much as they could have, and of course people who have been left behind. So we really need to start thinking about inclusive globalization as a way to make it more sustainable.
Jak Państwo widzą, ci rozsądni,
as you can see, our wise, reasonable and cool-blooded panelists are optimistic, but the winds will blow. The winds will be strong, so hold on to your hats and hold on to your wallets so they stay with you. Thank you for your attention, and now I would like to ask you to appreciate our panelists for their effort and discipline. And let's appreciate our moderator, Andrzej Olechowski. Thank you. World economy in the times of uncertainty. That was the panel. Gentlemen, if you would remain in your seats. Again, we would like to thank our panelists.